Alone here, going live. I'm trying something new today. I'm also going live on Twitch. The Twitch live is at twitch.tv/Dallas Trading Floor, and also on YouTube at youtube.com/Dallas Trading Floor. So get ready. We have some good stuff today. Market is kind of moving sideways, but hey, it's interesting that we're going to see. Hopefully we'll see some more. We'll see some more action today. So I mean, there you go. It's uh-oh. Great. Great. Well, here we are, Dallas Trading Floor. I've got some interesting stuff for you today. It's May 21st, 2020. I'm trying to make sure that I get all of the sound here. Hold on one second. Just a second. I'm going to kill the sound on this side. There we go. Okay, super. Just looking at my monitor here. Okay. On the show today, basically I want to talk to you about the overall market conditions. We do have a good market direction. It is up. It's amazing. The strength of this market is just, is just tremendous. I'm amazed at how it continues to move up, and yet, here we are. It's the Dow Jones is up today. It was down yesterday. The S&P is up a little bit. A little bit down on the volume, but still very, very, very good. And we're moving up towards that 10,000 mark on the Nasdaq. Now, the Nasdaq has shown a little bit of weakness into the close, but overall it looks pretty good. So, there you go. It's very interesting. Just wanted to take a look at the spider. This is the S&P 500 ETF. It's the largest ETF in the world, and typically it has a tremendous amount of capital in it. Typically about 220 to 230 billion, depending on the market conditions, and it's a really good proxy for the market. When I talked to you last, I was expecting a bounce off of about the 300 level. As you can see, it's moved well above the 40-day moving average. It's up. It's off a little bit today, but it seems to be following this nice trend here. I'm not so sure that we weren't going to get that we won't get a bounce at 308, 310. But again, I've been wrong on this before, because I was calling for a bounce earlier at about 275. So I did quite well in the early part of the March early part of March, basically shorting this, and then I changed my direction, and I'm basically long in all my positions now. So I just wanted to put that out there. I think right now it's a little bit tough to short, and I don't think you necessarily want to be short on the market right now. You want to be in your long positions, but there's some nice short trades that I've been making and seeing some very good progress for. And the first trade that I'd like to kind of go over is a very interesting kind of stay-at-home trade. And this is a trade that's easy to do. Um, it doesn't, it doesn't require any special authorization on your account. Typically, to trade options, you need at least a level one trading position, but that's very easy to get. And to do to buy and sell them, you really need the level three. That can be also achieved as well. But this is basically an 8-day trade. The trending on DocuSign, I don't know if you know this company, but I think it's doing tremendously. And we're seeing it move very, very nicely. And this is the easy way to pick up a little bit of money here. This is kind of a companion piece to my PayPal trade and also my trade on Facebook. I doubled down on Facebook. I even up my position. I mean, this is amazing. I've gone, I went in initially, I've upped it, and I've upped it again. So, and it seems like seems like Facebook is doing really, really well today. I think that this one might be a follow-on trade to that because DocuSign has sort of a lock on this work at home market, because this is one of the things that holds back people working at home, and that's signing documents. And this allows people, of course, to sign documents online. It's been a tremendous performance. You can see it's a 99 out of 100. Doesn't get much better than that. And also, I'll take a look at this relative strength line. It's just awesome. It's a 98 relative strength. That means that this stock currently is outproducing all but 2% of the market. So just very, very strong. Now, this is a simple trade. Basically, if you're to go into today, you purchase the 100 shares for $132.20 each, and then you immediately sell a option to buy them back from you for $134, which isn't a lot much more, but it works out because if the stock were to close at 134 or better on the on 9th, with the last day of the option expiration, this is a short option, take home $560. And that's a pretty good deal. And I'll probably be in this trade. Now, if you annualize this, it'll be about 196.2%, which is pretty decent for a trade. Just a lowly trade. Now, the reason I like to lag into stocks like this is because when a stock I think is going to really move higher, like DocuSign, I don't want to take a complete risk of going into that stock and not having some cover. So what I typically do is I'll go into the stock, I'll then sell an option on it, I'll collect the money, and this is a call option. And then if it exceeds that, well, okay, I get called out, but I still make some money, and then I probably will be back in the stock again. If it doesn't quite get to that level, then then you make some money too, because you end up pocketing the expired option money. Here's the thing about options, and I just wanted to put it out there. When the market is moving kind of sideways like it is now, this is one of my favorite trading strategies, because basically I find stocks that are near to breakout or breaking out, and buy them right or a little bit below the buy points, sell an option on them, and then collect the money. And this works very well, about 70% of the time. So most of the time, if you're selling options, you're going to win because of what they call the theta decay. Well, that's a fancy word, but basically what it is that if you sell an option on a stock as it gets closer to that expiration date, the value of it actually goes down. Well, that sounds terrible, right? If you're owning it, it's terrible, but if you're selling it, it's great because it's putting money into your pocket. Now, at the end of the time, if the market price of the stock exceeds the strike price, then of course you're going to get exercise, and that's okay too because then you'll make a little bit of profit on the upside. But you'll also keep the option, so it's a kind of a win-win deal, and it's a great way to go into stocks, especially if you're putting a position in, you're starting a position out, and you want to kind of get into a position. I do this all the time. I have a really nice one today on Nvidia. So depending on how it closes, I don't know if it's going to close above 360, but if it does, then I will be exercised. If not, I keep the option value. It was a very, very nice option as well. So let's see. I have some comments, which is always great. So let's see. Okay. Great. Okay. Wow. I'm finally getting it where people are seeing me, which is fantastic. Um, that's great. Okay. Let's see. I'm gonna hopefully, well, that should come up on the screen here. Let's see. I'm gonna show this one. This is a question on the VIX, and what the VIX is that it's called the fear index by a lot of people. But basically what it is it's sort of a volatility measure. And, I right now, they're right now, the volatility has been coming off the market, really since the lows that we made on March 23rd. Uh, so I wouldn't probably be playing like the TVIX or any of those right now, just because I think that the volatility is going down, and when, of course, the volatility goes down, some of those leveraged ETFs like the TVIX don't do quite as well as they would in a more robust market. So the VIX is moving down, and I do think, though, that if we do get a spike in volatility, and again, it'll be a good play. But for right now, I think the market is moving kind of sideways, trying to decide, which way to go. Are we going to continue to just continue to go up? It's kind of amazing that we're going up the way we are, but I've typically tried to concentrate my stock buys in the stocks that will benefit primarily from this shutdown. Now, I do think that once everything reopens, and a lot of the states are reopening now from this coronavirus thing, I think when some of the states reopen, you're going to see a bit of a problem with some of the names out there that that depend on retail. But the cloud kings, the big tech, that's doing well. It's bucking the whole market. So that's where I'm concentrating my interest, in stocks like Facebook, in stocks like Nvidia, which I think has a tremendous product line, AMD, and kind of all of the normal suspects. We're coming up very, very. This is hard to believe, but we're coming up again on another buy point, if you can believe it, on Apple. I mean, it's already come up so much. I was in it basically, you know, when it was like in the 230 range, and it's now, wow, it's way over 300. So it's really, really moving. Yeah. And oh, by the way, uh, yeah, this is a comment from Texas Sport Fans. This is on Twitter. This is on the TikTok feed, so I can't show it to everybody on Twitch and on YouTube. But yes, I believe that you know, as I did on my yesterday's broadcast, we have a buy point on Tesla. And I've done very well at Tesla stock this year. I think it's going higher. I do think it's going to 1,000. I think that's very good analysis there. But the buy point on Tesla is about 869. I don't know if I have a chart of Tesla right now for you, but that's about what the chart that is saying. What do I mean by buy point? Well, interestingly enough, in the stock market, it's very different than the real estate market. In real estate, you're always looking for to get the best buy for your money. You're looking for a bargain, right? Well, in the stock market, sometimes it's really, really odd because you're looking to buy high and then sell higher. Wow. That's kind of a strange you know, that's kind of a strange way to look at it, but that's sort of how you have to look at it. And so that's the reason why I'm recommending some of these stocks that are ridiculously high. It seems like, wow, you look at their multiples and you go, wow, that's, you know, that's really high. But, you know, value investing is, you know, not doing that well. The world is changing. It's becoming more digital, and you know, it's just one of those things. I mean, you know, it's just one of those things. So that's the reason why some of the stocks that I recommend, I mean, God, you look at them and you go, wow, that's really expensive stock. Why would I recommend that? Well, here's the thing. You don't have to buy 100 shares of the stock. You could buy 1 share of the stock and still get the same benefit. Now, what's happening is many of the stocks that used to split at their issues, they're not splitting anymore. Like, for instance, you've got Amazon, you know, it's in the $2,000 range. It's just amazing. So, you know, sometimes you can only buy a fractional share. Now, interestingly enough, on some of the platforms like Robinhood, you can buy fractional shares. So that's a great thing. So, you know, the price of the stock does not necessarily prevent you from getting into it. So, you know, that's just what I kind of want to put out there. All right. I'm going to go through some other stocks that I think, just by looking at the tape today, are, you know, are doing well and possibly even doing better. And the first one is another one of my favorite stay-at-home stocks. This one is not that expensive, and I think you could make some very, very good plays on this. I think, you know, this is potentially a $50 stock. I really do. It's Dropbox. Everybody uses Dropbox. I use Dropbox, and you know, uh, oh yeah, it is. Oh, okay. I have another one. Viral videos. Have you heard of Dr. Brad Kurtz? He says that day trading is over the long run very risky. Yes, I agree with that. I am not a day trader. I am what they call a swing trader. That's a very good point, and I'll tell you why day trading is not as good as it used to be. It's because of the algorithms that trade stock for the big funds, and that's one of the reasons why you can really get killed on day trading. But here's the thing. When I enter a stock, my average stock hold is between a week and maybe 2 weeks, and maybe up to a month. So I typically am making money week to week, day to day. And the way you do that, the best way you do that is you leg into the position as I showed you in that other one with the basically you buy and then you sell the option, and that gives you some protection. And then you also have a protection on the downside. Now, I'd like to talk to you about Dropbox because I do think it's in a buy range. It has a deep cup with handle. Now, what does that mean? Well, cup with handle. This is cup, and this is handle, right? It looks like a cup with a handle, kind of. If you're on acid, I guess, but it does kind of look like a cup and handle. And what that is that's a very strong chart pattern. Now, what do I mean by that? Well, if you have that kind of pattern, and you see that kind of pattern with an upward trending chart like this, with volume that's above the 40-day moving average, that's this little red line here, then it's a very auspicious sign. It means that people are accumulating the stock, typically bigger funds. And one of the great advantages of that, when that happens, is that you have the ability to get in and sort of swim with the big whales, kind of just swim alongside them and move up with the stock. And that's what I think is happening here with Dropbox. It's down a little bit. When I took this slide, it was down 2 cents, but and the volume's down a little bit, but this is a strong stock. Now, I typically like to see stocks that have at least a volume of 1 million shares a day. And of course, Dropbox definitely is in that category. Also, oops, I'm going to go back one more. It's a 99 out of 100 in terms of its composite rating. That means that's the very best rating that you could have. There's only about 5 or 6 stocks at any time on the market over, 5 or 10,000 stocks that have that rating at any one time. And Dropbox has that now. So I think that Dropbox looks like, at least as far as I can tell with the chart, it looks like it's probably going higher. So this is one you definitely want to watch the list. And I'm probably going to be acquiring this stock. I'm not in it now. I'm waiting to see how my NVIDIA trade went today. And if it was well, I'll probably take profits there, and then I'll move into something like Dropbox that will be the next to rotate into. So yeah, that's really so with Dropbox, my target on this one, that's a really good point. I just saw this come by on the Twitter, on the feed on TikTok. My target on this one is I would say it's about 35 or so. But typically, when I buy a stock like this that's moving into a buy range, that's moving up, I typically like to hold it if it's moving up to about 20% above where I bought it. That's a really important number. So on this stock, you're looking at, you're looking at really, if you were to buy this right now at 22.21, you're looking to hold it basically, basically up about 20% above that number. So, you're basically in the high 20s before you want to either sell it or take some of it off the table. Now, if the stock is moving really nicely, of course, what I do is I sell half the position, and then I ride on the gain. So that's but I just wanted to show you that on Dropbox. That's definitely one I think you ought to be on the lookout for. I think it'll do very, very well with this market. The next one, this is another one that everyone knows too. I'm kind of Captain Obvious today, but this is where the money is flowing in the market, and this is Slack. Now, it's true, Slack has a lot of competition, and this is one of the reasons I'm a little bit leery on it, because Facebook is sort of muscling into this space, and Facebook, is tremendous. I mean, I just increased my position in Facebook yesterday after increasing it 2 times this week. So, I see Facebook moving very nicely. There's really 3 competitors for this kind of messaging space. Well, there's 4 really: Zoom, Slack, Teams, and Facebook. I think Facebook is very powerful, but I also think Slack is, because Slack has a tremendous market share. So that's another that's another thing. I have a question here from VideoViz. What is your trading setup? What indicators do you use? Okay, well, that's a really good question. I am sort of a disciple of William O'Neill. Well, I'm not the greatest disciple. The really great traders like Mike McIlvaney are the best disciples. I'm a disciple of this, and I use the IBD information, and this is Investor Business Daily, and I don't get a subscription from them. I don't get I don't get credit from them. I should, because I always talk about the IBD, and I use their charts. As a matter of fact, this is a IBD chart that I'm showing you that I've clipped out because I just think it's so good, and it just shows you exactly what you need to see. This is the 40-day moving average. This is you don't want to buy anything that you want to buy it as it's moving over this line. Okay. And this is also the volume indicator down here. This is a very simple chart, but it has everything you need. Now, one of the great things about IBD is that it rates all of the stocks every night, and they will give a composite rating. Now, this composite rating is not nearly as good as the one I had before, the Dropbox. This is why I'm recommending Dropbox first on the list, because it's got a 99. Okay, but what they do is they look at every sector, they look at every stock, and they compare it with everyone else, and then they'll give you a composite rating. So I like to see that as well. I also like to see a very good chart pattern. Yep, I'm moving back here to Slack again, but and this is not as good a chart pattern as the Dropbox one. This is why I had Dropbox on first, because Dropbox has what they call a cup and handle. This has been proven to be one of the finest chart patterns in terms of moving higher. So if you have a cup with handle, this is something that you want to buy right as it's in the handle phase, not in the cup phase, but in the handle phase. It's more than likely going to move higher. This has just been the research that they've done over the years. They actually went back to 1880 and looked at all the stocks closings for basically 130 years, looked at the charts, and this is the most auspicious chart pattern. It's called cup with handle, and it's used by a lot of people to identify a winner, at least when you're going long on the stock. So that's one of the things. So that's an indicator that I wanted to show you. Again, I talked about Slack. I think Slack is really good because it's in that space, and I think it's potentially it's going to go higher. I have another question about overnight fees for swing trading. Are you ever charged overnight fees for swing trading? Well, it used to be back in the olden times, back when I got started a long time ago, that the fees were very high, and you were charged for pretty much everything. But with Robinhood and the competition, there's almost no cost in trading now. It's amazing. That's the reason I've changed my trading style, because the fees just aren't there like they were before. There's registration fees, but they're cents. I mean, I'm trading, I've been trading Tesla, um, not this week, not last week, but last month I was trading Tesla very actively, and here I am,